data center space, L&T or Anantraj. Mr. Chokhalingam, any view on both the counters? Which one should he enter?
See, in terms of conservative approach, I prefer L&T.
Okay, all right. So that's the view coming in on L&T. The next one is from Tej, who's writing us from Ireland. He's asking about IHCL and whether he can take a fresh stake into this one from a long-term perspective. But Rujit, the current levels, do you think he should make an entry?
I think buying with a gradual approach could be a good idea. Buy some quantity at current levels and keep some room that if you get any dip of about 7 to 8% from current levels, then you should add more at low levels. 650, 640 is a good support zone for the stock.
Next query is from Nitin from Gurgaon. He wants to know whether is it a good time to consolidate Jio Financial Services. Mr. Chokhalingam, any view on this counter?
I continue to maintain aggressive buy recommendation on Jio Financial. It is trading at one time price to book value, so which according to me is quite attractive.
Okay. All right. Pramod is calling us from Bengaluru. Pramod, hi. Very good afternoon to you. What's your query about?
Good afternoon. Actually, I bought IRB shares at 49 rupees.
Okay.
Now I'm at a loss of 25,000 rupees. Actually, I bought 3,300 shares. So should I average it or can I expect a turnaround for this?
Okay. Ruchit, any view on this particular counter where charts are concerned?
The trend is not positive. So when the trend is not good, better not to put fresh money to average out. On any pullback moves we are witnessing, the stock is not able to surpass this 200 EMA, which is now around 43, 44. So take pullbacks as the opportunity to exit and invest this amount somewhere else rather than averaging.
Okay, Ruchit, thank you so much for that. Of course, Mr. Chokhalingam as well. Thank you so much to both of you gentlemen for taking out the time and helping us answer all those queries. With that, viewers, we're completely out of time on this edition of Ask Profit, but do stay tuned. India Market Close up next.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक कॉन्सर्ट नहीं है. This is my life. This is my story. One night, no repeats. Book your tickets now.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends, before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real
Hi, thanks so much for joining in and happy Friday to you for what it's worth. My name is Alex Matthew. With me is Hiral Dadia and Sharad Dubey. Guys, it's been a bit of a troublesome week for the Indian equity markets and today is no different.
Yeah, I mean, the kind of cuts that you're seeing, that profit booking that's coming in, I think what it's lacking is the confidence that there is value in India.
And where is the trigger? We are just not understanding. There is no major negative trigger also happening, and now the key moving average is Nifty is below that.
So
IT is another factor that we're watching out for as well.
IT is another factor. In fact, we'll talk about all of that. Let's start with a check on where the benchmarks are, Sharad. And 0.7% lower at this moment, broken below that 25,100 mark. In fact, 25,500 was what we were talking about. If we break below this level, we're talking about the possibility of going to 25,000, right? So this is something that you want to watch for. Let's take a look at the heat map as well, just to see what the picture is. And there is significantly more red on the screen than there was yesterday. Reliance Industries is just about flat. So earlier today it was losing about 1% or so. It's recovered a little bit of ground. If it was worse off than it is right now, you would see more pain on the benchmark. Trend
the IT
okay.
is doing well.
Yeah.
A little bit of short covering for third day. But Alex, the red.
The red is significant, but even IT, and we'll see when we pull up the index, it has come off the high point of the day considerably so. But HDFC Life, Bharti Airtel, Indigo, you know what? Bharti Airtel is actually making it to the lower list or the bottom of the screen for quite a few of the days this week. We'll have to figure out on the charts whether there's something to watch out for. Interglobe Aviation, of course, reacting to that update from the DGCA. That is good news for you and me, Sharad, not so much for
consumers.
Indigo,
It's good, yes.
which is cancellation of tickets becoming easier. Maruti Suzuki, a few other names in the automotive pack doing not so well. ICICI Bank losing about 1.5%, and this is going to be posing a little bit of a challenge. Very quickly, I just want to pull up the IT index intraday chart, because this is something that started off with significant gains and you've actually seen a complete deceleration from that point. You've seen this play out over the course of the last couple of sessions as well. When that big news came through, the positive news came through, it actually bounced back. That hasn't been holding, right? So you spoke about the moving averages. What are the key factors to look at?
Exactly. But the first thing is that 25,350 mark. That was the 200 DMA. Now we are below that. 1 month low levels at Nifty. So it's a key technical average if you are tracking this. But remember, for the medium term basis, buy the dip strategy definitely holds. It's not intraday of one more session, but for the medium term basis. Options data is suggesting a minor recovery might be possible later on if a little bit more selling comes in, but largely IT is seeing short covering for the third straight day. But will it hold up? That's the question. For the last 2 days, the answer is no. Major sectors are seeing losses, but they're in a very narrow range, something between 2 to 3%. There's no major sell-off happening, but of course, capital market and select NBFCs on Bihar MFI News also are seeing a big drag. And interestingly, the European markets have opened positive. So largely we can say a neutral sentiment globally, but definitely we want to understand why the indices are cracking in trade. Over to you, Hiral. Stock specific, what's there on your watch list?
Lots more on the watch list. Thank you, Sharad. But before we head across to the watch list, Reddington, Tejas Network, Supreme Petro, Camlin Fine, Sarda. Few top movers in trade today in a market which is actually drooling under pressure. And to add to that, what continues to remain under pressure is Home First, VMM, which is VMart, Vesuvius, Credit Access and JK Tyre. These are few of the stocks which are moving in trade as we speak. But on the watch list, pressure continues when you talk about the consumption pack from a Nestle to a Tata Consumers and HUL, all under pressure. Eternal has seen a good recovery after that extended fall. Ultratech Cement, that stock is trading under pressure, not done really much in the last 6 months. Maruti Suzuki is seeing selling pressure. In fact, as Alex mentioned, all of your other auto names also are in focus today, and that is on the back of the auto sales numbers that will trickle in tomorrow. That is on the 1st of March, which is a Sunday. Reddington is also up in trade. Tejas Network, Praj Industries, Sun TV are all buzzing on the back of strong volumes. SpiceJet again on the back of the block deal along with a VMart retail. Vesuvius has reported numbers and that stock is in focus with a Coromandel which touched a 2-month low. In fact, some momentum or some movement that's happening when you talk about fertilizer stocks between yesterday and today. So watch out for that space pretty closely. And volume building up on Apollo Microsystem. You have your entire MFI pack which is in focus on the back of the Bihar MFI bill. That's the microfinance, bill that has come up, and that impact is what is visible. So these are the stocks that are in focus in today's session. But let's get in. Kunal Shah from Mirai Asset Share Khan, who's joining in to talk to us about what the levels should look like. And we have Deepan Mehta from Elixir Equities. Welcome to the show, gentlemen. Always a pleasure to speak to you. Kunal, let me come to you first. I mean, interesting sell-off that we're seeing in terms of where markets go today. The week has not really been that great, and it's specifically IT also, which has been on a back burner, though some kind of respite in today's session. If you have to look at Nifty and Bank Nifty, what are the levels that you're tracking from a perspective that someone wants to enter in trade on Monday?
Good afternoon. Good afternoon to everyone. See, I think firstly, what we have seen post that the US trade deal, the high gap up of what we had, we have been continuously making from those levels a lower high formation. So clearly there is no momentum in the markets. Today, again, 25,500 has also been broken on the downside 400 zone. And I think now the gap area, which is there around the mark of 25,100, that will be tested on the downside. So overall, the view remains negative, sell on rise for the market. 25,100 is what I'm expecting to be tested on the downside. And if we sustain below that, then we will probably will be heading towards 24,900, 600 zone. On the higher end, till the time we don't surpass 25,600 again, the view continues to remain negative on the Nifty index. The Bank Nifty index here in the last 3 trading sessions, what we were trying to defend was 60,800. That has been broken in today's trading session. But again, Bank Nifty has a couple of supports where 60,800, the next is 60,500 on the downside. A decisive break below the 60,500 will open up the doors for the Bank Nifty on the downside towards 59,700. 59,800 mark. So I think these are some of the key levels which one should watch out for. And if one wants to go long on the Bank Nifty index, only on a breakout above 61,300, one should be aggressive long, or else one should remain cautious even on the Bank Nifty index.
So there is a clear divergence, for FI favorites, so be it IT or banking, both sides, the story is very different. But Kunal, I just want to get your technical picks also. What will be the important picks today?
Yeah, I think overall, what we have seen in the markets, pharma again continues to be the safe zone on these levels. So I think Landmark Pharma still looks positive to me from the current levels. The recent swing high, swing high which was made, that has also been taken out. So clearly a bullish momentum that is playing out. You can expect the stock to go towards 2,200 on the upside in the very short term, keeping a stop loss on the downside close to 2,100. The second stock which is there on my radar, that is on the weaker side, that is CDSL. It has started to lose momentum, facing rejection at the 20 DMA. There is follow-up selling pressure, and we have seen the stock forming a low top, low bottom formation. So here again, the sentiment continues to remain on the weak side. One can expect further decline over here, 1,240 to 1,020 is what I'm expecting on the downside for CDSL. CDSL remains a sell for me with a stop loss of 1330 on the upside.
Right, so those are the stocks that you should watch out for on the basis of technicals. Deepan, before we get into stock-specific questions with you or pointers with you, just wanted your initial view on what you're seeing this week. Because one would have thought that with some of that tariff turmoil dissipating, of course there remains a little bit of uncertainty, there would have been a little more interest in the Indian equity markets, but it seems like every move upwards is being sold into. On the fundamentals, are there any triggers that you see that are causing this pressure on the downside?
Yeah, good afternoon, and thank you for having me on your show. No, I don't think so. I think fundamentals remain strong, and today's GDP number also perhaps will reflect that as well. We had a decent earnings season per se, and apart from software services, I think all industries are chugging along pretty fine. Growth dynamics are decent, and because of this correction, valuations also are at reasonable levels. So I'm a bit perplexed why the market is behaving the way it is, but look, market is God, so we have to respect it. My sense is that this uncertain time can last longer than we think. But from an investor's perspective who has got a 3-year view, I think these are great times to be overweight equities, especially small mid-cap stocks. I get the kind of a same feeling when I was just around COVID time. And after the returns were phenomenal. So I'm pretty positive on the market as a whole. I could be wrong. You could see another 5-10% correction also. But if you're prepared to ride out more uncertainty, more correction, and build your conviction, then certainly I think next 2-3 years could give very good returns.
The next 2 to 3 years, something which Deepan Bhai has stated that there can be a good returns coming in. But let's move on. The Supreme Court has delivered a decisive ruling in favor of Sarda Energy and Minerals, rejecting all appeals filed against the company's resolution plan for SKS power generation. Varsha is here with more details. Varsha, the stock is up 6%. What are the key takeaways from here?
Well, we all know that Sarda Energy is actually moving from minerals to energy portfolio, and hence this ruling is very important, and hence we are seeing the stock is up 7%. Now this is related to Supreme Court approving Sarda Energy's buyout plan when it comes to SKS power. The deal value stands at around 1,950 crore, and the legal fight is finally over. Now, who is buying whom? So Sarda Energy and Minerals will acquire SKS power generation, and the process is done under insolvency and bankruptcy court. Now, who opposed the deal? Well, Torrent Power and Zindal Power challenged the plan, and Supreme Court rejected their objections, and finally Sarda Energy will buy SKS power. Now, onto the what does this mean? That Sarda Energy officially wins the bidding war, can take control of SKS power. No more legal uncertainty, no more that legal overhang on this. Now, why this is important? Because of the big expansion move for Sarda Energy in power sector. As I was saying, the next growth trigger is actually for Sarda is power segment, and shows that IBC approval plans are filed and protected. Now, this is a positive signal for future insolvency cases, and as we know that Sarda Energy is going big when it comes to their energy portfolio, and all the growth has been aligned to the power or energy sector, and hence this ruling is really important because that aligns the growth prospects for the company, and hence we are seeing the stock is up almost 7 to 8% in trade.
Okay, right. Yeah, well put, Varsha, and that allows us to pose the perfect question to Deepan Mehta. Deepan, if you've looked at Sarda Energy, of course, the story or the conversation about the change that they are undergoing in the business lines that they have is well known. But what do you make of the latest development?
No, sorry, I have no clue about this story. I don't want to comment.
That's perfectly fine. All right, let me go across to Kunal then on the technical charts to see if Sarda Energy, with about 6% of an uptick as things stand right now, has more legs to it. Would you buy right now?
I think, yeah, definitely I'll buy it right now. 539, 540 has been the hurdle for the stock, and that has been taken out today decisively with volumes. So now it opens up more upside for the stock. The next level on the upside, what I'll be looking out is somewhere close to 584, 590 on the upside. So I think even at the current levels, it looks attractive to buy. Now the support on the downside is placed at 525, 530 zone.
All right, but the closing is very much important, especially if you are in the F&O space, because the 200 DMA level that has been breached downwards for Nifty index. But let's look at stock-specific moves where the action is coming in. Long build-up coming in, interesting for Dixon Tech and ONGC Oil India also going up in trade, or BSE Oil and Gas Index actually doing well, one of the top gainers. I could talk about it. Let's also see the short covering candidates where the action is there. Kalyan Jewellers and KA Industries, but it's not that convincing, but definitely volume pickup is definitely there. Long unwinding also, no major trade because most of the trades are happening in the short segment. But yes, Dalmia Bharat, that's where a little bit of long unwinding has started taking place. But today, of course, the capital goods and your select NBFC companies, this is where the pain is. Let's just show the key short build-up which is happening, and largely we see one is coming in from the capital goods, the capital market space, that's down 4%, and Bandhan Bank, that's also seeing a little bit of pressure. Kunal, I want to get you on this. Two sectors, both capital and the select NBFCs which we are talking about. Of course, there's the Bihar MFI impact also, which we'll talk with Dipan on that. But on the technical charts, capital market stocks and select NBFCs which are cracking in trade, what are the technical levels looking like, and the important stop losses also?
Yeah, I think firstly, the one call which I initiated on the sell side was from the capital market space, that is CDSL. So again, that continues to be on the negative side for me. You can expect further lower levels for the stock towards 1200 mark as well. So that is again looking on the weaker side. Even from the capital markets, CAMS has also given us a breakdown. So that is also looking weak. Can test the lower end of 610, 620 zone. So CAMS, CDSL, these are some of the stocks which are looking weak. I mean, NBFC space, I think overall here the setup still looks more or less sideways to me. In fact, contrary a little bit, I'll be bullish on certain NBFC stocks over here. If you get a dip in LTF, that would be a good buying opportunity around 275 to 80 zone. Probably one can expect a good recovery again back towards 300, 305 on the upside.
All right. Let me go across to you, Deepan, on a couple of interesting takeaways from conversations we had this morning. And we spoke to two companies. Pine Labs was one of them. Zaggle was another one. And both of these entities, the management said that 25 to 30% already of their coding requirements are being taken care of by artificial intelligence. Zaggle said that they've reduced their workforce in the third quarter, and Pine Labs said that they're unlikely to need more engineers from this point on. Productivity gains are going to result in any improvement that they see or any incremental generation of business. It's going to get taken care of with the existing stock. Is this only a sign of various other players operating in the same manner? And what do you think the financials will see heading into FY27?
Yeah, first of all, I think it's a very good particular story and theme to track, and maybe you should ask more and more managements, especially companies which are heavily technology driven or dependent, not driven, dependent, as to how they're adapting artificial intelligence. And one kind of a situation comes to mind about the Bajaj Finance con call, where Rajiv Jain explained in detail how they are using AI. So I'm certain that there'll be many winners in this AI theme, and companies which are able to embrace this change and proactively work towards using AI will be the winners. And I think you already found two companies over there, Pine Lab and Zaggle Prepaid. A disclosure that we are invested in Zaggle Prepaid and Bajaj Finance, and Pine Labs is also top of the mind in terms of fresh investment as a measure of disclosure. But I think that the application of AI will differentiate you from the competitor. And I think early adopters will certainly be rewarded very handsomely by the street. We should track this particular theme more closely. And I think that there's just too much of attention being given to the software services companies and how their models get disrupted or not disrupted. Are they going to be implementing AI? Are they going to get, less business because of AI? That is just noise. End of the day, if you want to have an eye on the ball, exactly what you did, focus on companies which can cut their cost by 15, 20% or so, and get those gains over there in terms of better productivity, better operating profit margins, or improve services, and that can just strengthen their moat.
A nice take, Deepan, when it comes to usage of AI and the kind of companies that could benefit out of this as well. But stay with us. It's time for the rapid fire now. A couple of stocks that we're talking about in today's session that I will be taking you through. But Kunal, let me come to you first. Tejas Network, that's the first one. They've got a supply order, strong moves coming in there.
I think from the past two trading sessions, the stock has witnessed a good move on the upside. Now, the next level, what I see on the upside for the stock from a short-term perspective would be 500. So there is some rally pending. It could go towards 490, 500 zone from the current levels. But fresh entry at the current levels, I would not recommend any dip. That would be a good opportunity to enter into the stock.
Okay, correction is an opportunity to enter. Reddington, 17% gains, biggest intraday gain since November 6, I beg your pardon, strong trading volumes.
See, I think the next level of resistance for the stock is somewhere around the mark of 300. 284 is where it is currently trading. So can extend this gain towards 295, 300 on the upside.
Okay, Phenolics Cables is trading with strong volumes as well. Along with that, look at a Vishal Megapart. Your views?
I think Phenolics Cable, a little bit of upside is still left towards 970, 980 zone. That could be tested on the upside. So still the view remains positive. We have seen strong moves in the past two trading sessions.
Okay, and what about a Vishal Megamart?
Vishal Megamart, again, we had seen some buying interest from the lower levels, but now again, that has been wiped out. So here the view remains, if 115 on the downside is breached, then probably you will see further selling pressure.
Okay, so that's the rapid fire, but another stock that we want to pull up is the IDBI Bank as well. Let's look at that one because there are news reports suggesting that Fairfax is the front runner, and this is to actually buy majority stake in IDBI Bank. That stock is at the day's highest levels as we speak, and this could actually become one of the largest foreign investments that could be coming in terms of the banking sector. The government's 61% stake is valued at around $8 billion. Now, this 61% stake is what the government as well as LIC hold. There are talks ongoing. The deal outcome is something that is still uncertain, is what they're reporting. Now, whether Fairfax has the capacity or not is the question. They've said that they will be able to purchase it independently. They may bring in a partner at a later stage, is what reports are suggesting. And this could actually, Fairfax could actually consider merging a IDBI Bank with a CSB as well. If you pull up the charts of CSB, let's see what's happening on that counter. And Fairfax, as we know, already controls a majority stake in a CSB. That stock nearly at the day's lows. Some minor correction coming in from there. Deepan, your view in terms of, IDBI Bank, Fairfax coming in, and a potential merger of the two banks?
I think it's great for minority shareholders of IDBI Bank, and even if the transfer of ownership does not take place, I think IDBI Bank is now a phenomenally efficiently run bank with good quality balance sheet as well. They have completely wiped out all the old losses which they had. The NPAs have been cleaned up. Now their loan book is amongst the cleanest in the industry. Growth rates also are better than the industry growth rates. And certainly, I think they are on a new growth plan. So it'd be a good purchase for whoever buys IDBI Bank. And at the same time, I think a merger with CSB also will make sense because I think geographically it will kind of diversify the revenues, and a stronger bank is always welcome. But I just have one word of caution on the entire banking industry, that the way the industry is going is becoming more and more of a red ocean, and competition has come through from the PSU banks also, which was not there earlier. And also, I think a lot of competition is there from the capital market. So I would be a bit circumspect in the medium to long-term prospects of banks. I'm not completely convinced that such high 3% type of plus net interest margins are sustainable. Although I think India's lending requirement is strong and chasing consumer lending is a good idea, I would prefer to play through the NBFCs where there's more flexibility in terms of lending, in terms of the norms, provisioning as well. So that's the way I would like to play it. With banks, I'm getting a bit circumspect with every passing quarter.
Right. So bank, of course, there is a skeptical approach to it, but NBFC is something which Deepan is finding a little bit of comfort. But now it's that time of the day where we get you the khabar on the street, and Somit is here with the stocks. Somit, in this market also there must be a couple of stocks which are there in your radar, whether the buzz is there.
Well, just three stocks, given that market is quite weak, not much of an action that we are seeing, or not much of chatter in dealing rooms that is happening. A few stocks that still dealers have highlighted. Firstly is MCX. Dealers indicate that there are some buy flows on the institutional desk at the lower level that we are seeing for this counter, and dealers indicate that some margin easing on gold and silver is something that will benefit MCX and could lead to higher volumes. So that is one of the reasons why we are seeing some buy flows at the lower levels for this counter. Dixon Tech, that stock has been gaining on reports of fresh round of PLI scheme for smartphone makers. And hence that stock is gaining in even such a weak market. But dealers still indicate that there are sell flows that continue on higher levels from the large HNI desk. That is still continuing for Dixon Tech. So keep an eye out for Dixon Tech as well. When it comes to Voltas, dealers indicate lower channel inventory ahead of summer, and that is one of the reasons why the stock has perked up nearly 2% in trade. Channel checks are indicating that higher stocking has happened so far in the fourth quarter in anticipation of a strong summer this year, and also because of some price hikes that could come in going forward because of the increase in the commodity prices that we have seen. So both these factors have led to higher stocking by dealers, and that is one of the reasons why inventory has come down, and this could benefit Voltas in the fourth quarter numbers as well. So that is one of the reasons why the stock has perked up.
Great. All right, Somit, very interesting three stocks, even if it's a limited list. And I would like to double click on Dixon Technology. Let's pull up the chart and see where it's currently trading, because I'd be very keen to find out what Dipan has to say about this one. 4.8% or thereabouts, and 10,600 now on the ticker for Dixon Technologies. It's a far cry from the heady valuations, Dipan, that it has had in the last 3 years. So therefore the question to you, yesterday we were hearing about reports of the possibility of lower smartphone sales, and this obviously has a natural bearing on Dixon Technology. But at the same time, there are, as Somit just pointed out, certain PLI benefits that are seen for the company. Do you think that the valuation as it's poised right now is attractive from the long-term standpoint?
I certainly think valuation-wise, it has reached attractive levels, and no doubt that a soft quarter. Management commentary also was weak, but I think these are companies, which are in a way, going to benefit from the longer-term trends which are taking place in electronic manufacturing. A lot of electronic manufacturing, be it mobile phones, other electronic devices, is going to get outsourced, and Dixon certainly has displayed exceptional execution. And also, one more fact comes to mind is that they are going very heavily into backward integration. And as and when the JVs and the new plans for backward integration, be it for cameras or be it for screens, they go into stream, they should be able to improve their operating profit margins, and also it may provide a new source of revenue for the company. So first of all, the disclosure, we are invested in Dixon Technologies, and we do feel that a lot of the negativity in the stock has got priced in, and maybe from these levels it can restart to retrace the lost ground.
Your views on Dixon Tech? The stock is up almost 5% above that 10,600 levels mark. What are the key levels looking like? Any other sustained up move from here?
I think the key levels to watch out here will be 11,200. That has been the resistance for the stock in the short term. So 11,200 is where I'm expecting this pullback. Overall, the larger term picture still continues to remain on the negative side. We'll further need confirmation for the stock for a trend reversal. 12,000 is something which would be on my radar. Once the stock surpasses that, then probably you can confirm a trend reversal into the stock.
So that's with regards to EMS players. In fact, Keynes as well has been in focus. PG Electroplast lately has been in focus. So watch out for these names which have been beaten down. Some buying interest coming back soon. But moving on, we're talking about IT and real estate hand in hand, because the moment there is pressure building in terms of IT, there are job losses, and that somewhere has an impact when it comes to real estate as a sector. Though today, if you talk about IT as a sector, it is buzzing in trade. Now, what is keeping it afloat? The oversold index is seeing some sharp rebound today. Two, your mood lifters mainly have been Accenture and Cognizant, where both of these counters have seen some good uptake, and that's what is having some bit of a counter impact as well. Now, AI is not becoming as a threat, it's seen as an opportunity, and your AI infrastructure, data centers, GPUs are the ones who are in focus, and valuations are at multi-year lows. It's the worst fall since September 2008, as we've seen in terms of the monthly fall on Nifty IT index. And in terms of February performance, Wipro is down 14%, worst fall in 4 years. Infosys down 20%, worst fall in 13 years. And you have HCL Tech promoter buying that's coming in as well. Vama Sundari has bought around 4.4 lakh crore shares. So lots brewing in this space, but what's the counter impact that it could have in terms of real estate? Gulam Zia from Knight Frank India joins in. Gulam, welcome to the show. Always a pleasure to speak to you. You know, I mean, what is the mood looking like right now? That's what we want to talk to you about. Are you seeing a change, a shift in terms of inquiries, in terms of the booking numbers that you're seeing, and specifically when it comes to IT hubs?
Well, first of all, thank you so much for calling me on this platform. Always a pleasure to interact with you and to be in front of your audience. The question relating the recent layoffs on real estate and impact of that, we still don't see any impact actually on both. Like either if I'm talking about housing sales or even offices, nowhere is it reflecting, because last year we saw a bumper year for office absorption. And at least the current trends is that the inquiries for office spaces is also as strong, if not any better, than what it was last year, same time. And housing, very strangely, there is no slowdown in housing market either. Like we are looking at one of the best Februaries, the kind of numbers that we are tracking right now, the best month in last 14 years. In Mumbai, at least, the kind of registration, the euphoria is, there is no slowing down either. So while the layoffs are talking a lot of those AI-related, disruptions, but then at least on real estate, we don't see any impact yet.
Gulam, hi, Alex here. So just trying to understand then in certain pockets, and obviously these are, the real estate has to be looked at in micro markets. So I was speaking to somebody just a couple of months back, just before the budget in Coimbatore. They were saying that the property prices have gone up very significantly because of IT demand. And she, as a real estate developer, was saying that 60-70% of the demand comes through from IT. So hypothetically, if there is pressure on the workforce participation, and if IT companies as a whole are moving away from that workforce-led model to a delivery-based model, then is there the possibility that you could see supply slowing heading into FY27?
Well, once again, Alex, I would want to bifurcate this into two asset classes the way I did it earlier. So even if I'm talking about offices, that question, because the recent upswing in GCCs, Global Capability Centers, etc., has given a completely new twist to the Indian office space market for last 2-3 years, which never was a demand driver, say about 4-5 years back. So this is a completely new demand driver, which has added a huge momentum to office stocks in the country. And in different locations, as you rightly said, the impact is different. But specifically for housing, the only market which has seen some signs of slowdown is NCR, which is not so heavily dependent on ITS. On the other side, Bengaluru or Hyderabad, these are markets which are first of all not showing any slowdown, any sign of slowdown. Hyderabad, for that matter, has been showing, a non-stop kind of improvement in prices as well as number of sales. The only thing, Alex, I agree with you is the price rise. The price rise has reached a certain stage where we are expecting that these are actually going beyond the affordability numbers, and that can have an impact on sales number in times to come. And many developers are already talking about that. And that's also reflecting in lots of those freebies kicking in. But net, at least till today, we don't see much of an impact. And as I said, markets like NCR have not much of a dependence on AI or IT per se, are showing signs of slowdown. So these are a few confusing signals emerging. But I can't put any of it purely on AI-led disruptions. The markets have their own nuances.
Gulam, on that note, thanks so much for taking the time and for explaining this to us. Important to have you this afternoon.
Thank you.
I very, very quickly want to get your view, Dipan, on this, because some of the pre-sales data that we've seen is not as rosy as that, as you might think, right? So quick view on whether or not you see there being any disruption whatsoever on account of job losses, particularly because IT in certain pockets is such a large buyer of real estate.
Well, I think generally, real estate has hit a slightly softer trend, although the multi-year trend remains intact. But I think there are some minor challenges as of now. So I'd be a bit circumspect in real estate as well. And the numbers will come through, but I think the number of new projects and new bookings, base effect what's coming into play over there, should soften up a little bit.
So that's with regards to where IT, real estate go. Another sector that is in focus today, which will report, the monthly numbers on the first, is the auto sector. Let's quickly pull up all the counters on the screens because you'll see what is in store. Clearly, what you're looking at is a strong demand across segments. Now, Bajaj Auto, TVS, Hero Moto, Eicher. On a year-on-year basis, we are expected to see some bit of a growth in Bajaj and TVS. Hero is showing a 73% decline, so watch out for that one. And Eicher, again, lower double-digit growth is what you're watching out for. In terms of four-wheelers as well, on a month-on-month basis, between January to February, you'll have to compare. All of them are expecting a decline in that range of 7 to 10%, whereas on a year-on-year basis, you're seeing M&M, which is seeing very strong growth, which is then followed by Tata Motors. You have Hyundai and Maruti Suzuki pretty much at the same levels. Commercial vehicles, a similar trend, 24 to 28% is the kind of growth that you're expecting on a month-on-month basis, but on a year-on-year basis, it's seeming to be absolutely flat or mildly negative for a Eicher ECV. And in terms of tractors, again, it's been a good season for tractor sales. 22 to 29% is the kind of growth on a year-on-year basis. But it's going to be interesting to see how a M&M could see a deceleration to the tune of 20%. And these are consensus estimates that we are picking so far. Nomura's view is that passenger vehicle inventory is comfortable, discounting is slightly higher, two-wheeler momentum is firm, and it's rural sentiment which is strong. Jefferies is talking about wholesale to be in double-digit growth across OEMs, and they're expecting wholesale growth in that range of 10 to 45%. You'll see the numbers on your screen. So very mixed views coming in there, and the month-on-month and year-on-year growth is showing you some bit of deviation. So that's what the auto numbers are expected to look like. But very quickly in terms of markets, a sudden downtick, Alex and Sharad, that we are seeing right now, and that's what we need to address. And I would request Deepan to stay back to talk to us about this as well. The sharp downturn that's coming in, we are at the day's lows. We've broken below that 25,250 mark as well. 25,200 is something that we should be tracking right now. Let's just look at the components and contributors of Nifty 50 to understand what is putting pressure from an ICICI Bank, Bharti Airtel, HDFC. So it's mainly your financials which are actually putting that kind of pressure right now. If we can also see a RIL, because that is another heavyweight, a mild change in terms of Reliance Industries also has a major impact. If we can have that intraday chart, there you go. Reliance Industries also seeing that sharp fall right now, which is being reflected in terms of Nifty 50. Deepan, a sudden downtick that we are seeing in terms of markets. What are you picking up? Anything that you see here?
No, I'm in front of your cameras. I haven't picked up anything. Right, it's okay. These things happen. I think today there's MSCI rebalancing, so maybe something is happening over there, but nothing really to pin down why such a huge correction has taken place.
But you just added value, because MSCI is something we completely missed out. We spoke about that this morning, and yes, absolutely, it's the MSCI rebalancing probably which is causing this kind of a move right now. But thank you so much for joining in. Always a pleasure to speak to you. I mean, this is something that we picked up this morning as well, with the inflows and outflows that could happen, and I think that's been reflected. Yes.
Exactly. For the last half an hour, you will see the volatility, because the adjustment day comes in.
It does. We'll talk about some of the stocks that we've just mentioned. We have to slip into a very quick break. On the other side, you'll get the top buy today and sell on Monday strategy. Stay tuned.
First India tour in your city. Ragon with Shankar Ehsaan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times Melody, 5 times Masti with NDTV Good Times. Go grab your tickets.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक कॉन्सर्ट नहीं है. This is my life. This is my story. One night, no repeats. Book your tickets now.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Niraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
Welcome back. You're watching India Market Close, and even as we speak, the markets have taken a turn for the worse. First, take a look at the Nifty 50, and you're seeing it trade at the low point of the day. There's a sharp crack that has come through just over the last 5 to 7 minutes or so, down about 1.4% and below that 25,200 mark, ratcheting towards that 25,000 mark. What is playing out? First of all, the breadth of that 50 stock Nifty 50 has actually turned very dramatically. Only 4 stocks in the green. Pull up the heat map for the Nifty 50 and you'll see what I'm talking about. 46 stocks now trading in the red. You have Sun Pharmaceuticals that is trading with the biggest cuts. Mahindra and Mahindra, Bharti Airtel, not too far behind that, but it's really the heavyweights. You will see this in the contribution list as well. When you look at it, the biggest weight on the downside is ICICI Bank, followed by HDFC Bank, Bharti Airtel losing quite a bit of ground as well, Reliance Industries. If we can pull up the heat map for the Nifty 50, let's do that first, and you will see what I'm talking about. Just 4 spots of green. on that screen, and a large part of the market of the Nifty 50 in the red. Pull up the contribution chart as well, and you will see that the heavyweights on the Nifty 50 are really pulling the market lower, pulling the benchmark lower. ICICI Bank, HDFC Bank, Reliance Industries in that list. Now pull up the intraday chart for the Nifty Bank as well. It is trading now with cuts of over 1% and underperforming to a significant degree. Of course, this is an index that has proved quite resilient in the recent past, and that hasn't been the case in trade today, likely on account of ICICI Bank as well as HDFC Bank. Pull up the intraday chart for the Nifty IT as well. You started the day with gains of 1% or over 1%. It is now just about flat. So all of those gains have now been erased. Let's talk about a few of the factors that are at play right now. And in fact, let's go across to Somit Sarkar to get those details. Somit, few factors at play, possibly even the MSCI rejig.
Well, I'll just move out here, and as you can see in this chart for the Nifty 50, clearly in the last 5 minutes, we have fallen nearly 150 points, and clearly shows that some algo trades must have hit at around 3 p.m. That has led to this sharp fall. One of the reasons could also be because of the MSCI rebalancing that was expected to happen today. But apart from that, there's no other technical reason that could be found out. Also, do remember that we were trading below all the key daily moving averages, that is 50, 100 and 200 DMA. So some algo hits must have happened that could have led to this sharp fall of 150 points. MSCI, again, as I mentioned, could have been one of the reasons. But apart from that, FIs have also been continuously selling, as Sharad was also pointing out earlier. And if you look at the sectoral indices, the fresh sell-off that had started at around 3 p.m. was largely led by IT stocks. IT stocks were gaining throughout the day, but post 3 p.m. we have seen a sharp fall coming in all of them. And as you were mentioning, Alex, that in the Nifty 50 basket, just 4 stocks are managing to stay in green. While if you look at HDFC Bank, ICICI Bank, Airtel, all of them have been contributing to this fall. All these 3 stocks have contributed nearly 100 points to the downtick that we are seeing. Though Sun Pharma is the top loser, the contribution to the benchmark fall is much lower. Yes, IT stocks are still in green, HCL Tech, Infosys, but they have come off sharply from the day's highest point. In fact, TCS, which has a higher weightage, has come down and is trading in red 0.2% now. Apart from that, if you look at the sectoral indices, it's largely Nifty Real Estate, which is one of the top sectoral loser in trade, supported by Nifty Auto, Nifty FMCG and Nifty Metal. Nifty IT index now up just 0.3%. Could be some MSCI-led rebalancing as well, but we can see that it has happened sharply at 3 p.m., sharp 150 point, and usually the MSCI rebalancing happens in the last half an hour or 15 minutes of trade.
Okay, and to add to this, thank you, Somit, for that. You know, if I'm seeing there are 239 stocks right now which have actually hit a 52-week low in intraday trading. So that is telling you what's happening to the breadth, what's happening to the kind of cuts. We have Kush Bora also who's joining in. Kush, I'm sure, you know, you didn't really expect something like this when you started off the day today at NDTV Profit. Right now we're seeing cuts of nearly what? We are below the 25,200 mark. What are levels indicating?
I was expecting this kind of a sharp gash. You know, we were speaking about buy on declines, but I would suggest that, you know, hold up on that, because some of the key support levels have been broken. The 200-day moving day average, average on the Nifty has been broken, and how. So, and plus a lot of sectoral breadth is also negative. So my suggestion would be just to, wait this one out. Anyway, we are just about, 18, 20 minutes away from the market close, and there's the weekend. I would suggest don't act in panic, not even a buy call, not even a sell call. Just hold up, see what pans out. We don't have a very clear reason. MSCI rejig is perhaps one of the reasons, but let's wait and see how markets react on Monday. If there's any kind of a rebound, I think this could just be a dip, because of a technical reason. But that remains to be seen, and hence I suggest no action or no activity just yet.
Stay put and don't do anything. That is also a trade. In fact, if you don't do something. Ajit Mishra, do you agree? Do you concur? But what, and also a supplementary question to that, what if you already have existing positions and you've been betting on the wrong side? How do you deal with that right now?
Yeah, good afternoon, sir. So what we are seeing right now is the range breakdown. It's been almost 3 weeks we were hovering in this 25,400, 26,000 zone. And earlier also we breached this mark of 25,400, but this time around it's a decisive break, and that's the reason why we are seeing this pressure emerging. alongside with the technical factors, what the MSCI rebalancing and the other reasons.
Ajit, apologies. I'm so sorry to cut you off, but it seems like we've got you on a bad line. I'm going to try and repatch you because we couldn't really make out what you were saying. Kush, let me ask you this question. You said don't do anything, but that assumes that you have not already initiated a trade. For those that have done so, what kind of advice would you give on either side?
Very, very pertinent point, Alex. Now, assuming that you already have a trade, if it's not a leveraged one, if it's in a if it's in the cash segment, it's like I said, not a bad idea to not act in panic and not sell off. Like I said, this is a very sharp reaction. In the last few minutes, of course, the markets were a little lower throughout the day, but this breakdown of those support levels, 25,300 on the Nifty and about 60,800 on the Bank Nifty, which was being respected for the last few days. This is a very sharp reaction. So my suggestion, if you have a position, don't act in panic. If you can hold off, if it's not a leveraged trade, then you can still hold on to that. So my suggestion would be hold on. Yes, the resistance levels have shifted lower as we speak as well. So 25,800 to 25,600 is what we spoke of earlier in the morning, but that seems like distant history now. The call option base has shifted lower to even as low as 25,200 where the Nifty is currently. So yes, the resistance levels are shifting lower. But again, acting in panic has never done good to anyone. So like I said, if you don't have a leveraged position, if it's just a cash position, and if you can hold on to that, I think you should hold on to it till Monday and see how the markets react. And if there is any kind of a rebound that we see in the coming days, especially with the Monday opening.
Right. Thanks a lot, Kush, for that. But Kunal, I want to get your views also on that. A sudden fall in the markets, it might be an algo, and of course the MSCI adjustments also coming in. Your views on that?
I think overall what we have seen in the markets that post that gap of what we had got, we have been continuously forming the lower top bottom, lower top approach over here, and 25,250 to 25,800 was the broad range in which the index was trading. Now we have broken over there decisively. Today is going to be the weekly close as well for the market. So I think now is for further downside for the markets. I'm expecting Nifty to go toward 24,900, 24,600 on the downside. So I think not looking good for the markets as being a daily close as well as the weekly close. Even if you get any positive opening on Monday, that would be again an opportunity to sell. We can expect lower levels for the market.
Okay, Neeraj Devan with us, independent market expert. Neeraj, thanks so much for having the patience. Sudden sharp fall, which is why we had to go to take a look at all of the technical indicators as they're standing. What would you do with your portfolio? The suggestion broadly has been on the technical side as well to not do anything at this moment. You don't want to catch a falling knife. And so with your portfolio, what do you do?
Yeah, good afternoon. Actually, if you see over the last few days, we're getting some base building happening in some of the stocks also. In the mid-cap, small-cap space also, there's some buying that you can see in certain stocks. So I think this is a market where you have to have a bottom-up approach. If you're getting, because of these deep sell-offs like we're seeing today, if you're getting your stocks at a good valuation, I think one should be accumulating. One should not go all out and buy right now because still there is weakness in the market. There is a dearth of buyers in the market. If someone comes to sell a small lot also, the buyers are not there. That's why the stock slides more than one. It will slide with small selling. So I think one should be on the watch. And if you're getting good valuation, getting your stocks at good prices, keep accumulating these debts.
That's an interesting take. Someone who's been on the sidelines right now, probably these could be good times to start accumulating as well at lower levels, at lower valuations. But my question, Kush and Kunal, I think we have both of you, is I'll take it with Kunal first. Now, Monday is a day that we should be watching out for. Tuesday is a holiday. Being a truncated week, expiry will be on Monday as well. What happens then? What are you looking out for?
Yeah, I think definitely from an expiry point of view, 25,300 was what we are looking at. That has been breached on the downside. So now the next psychological level definitely comes at 25,000. That will be tested. So I'm expecting 25,000, 24,900 to be tested on the downside on Monday. And probably then you will see an expiry somewhere around the mark of 25,000 only.
Okay. Kush, any views that you have on this? Because Alex did ask you as to what someone should do with positions that they've already taken as a buy on dip strategy. But being Monday as an expiry day and a truncated week, what are you looking at?
So here, even now, if I see, the 25,000 put option really does not have as big a base, as does the 25,300 or 25,400 call option, suggesting that, while there could be a technical and a psychological support more so at around the 25,000 mark, at least in terms of data and in terms of option writing, that is not evident. So, this could well be a level that could be tested. Like I said, right now, given the ferocity of the fall, wouldn't want to venture into a trade and go out and say let's buy that put because the put base is missing right now. We could well have a rebound. Does it get sold into or does it become a short covering rally from there? That is something that Monday will tell us. But like I said, there is a good possibility that we could see slightly lower levels also. So I wouldn't really venture a trade right now. And yeah, being a truncated week, we've seen, and I'm just saying something contra now, which is we've seen that markets have a tendency of reacting very in a very opposite manner on the expiry days. So maybe some pullback on the upside could not be ruled out. So there is a good possibility that markets could go higher and test the 25,300 mark as well as we've seen in the expiry. But like I said, given the ferocity of the fall doesn't warrant any trade just yet.
Okay, very, very quick last view, Kush. Since we spoke about it this morning, the IT index was something that we were looking at as a bright spot. And you were talking about, if I remember correctly, 30,800 being the immediate resistance. Does that stay? And would you still initiate a trade? It's the only bright spot, but just about 0.2% higher as we speak right now.
When the fuse will go off over there, Alex, we don't know.
Exactly why I'm asking Kush.
So, Alex, irrespective of, just for a minute, irrespective of whatever's happening in the market, the IT trade still becomes, a buy. The only reason for that is that, it's already massively oversold. So there could be a rebound that could come in. Like we've discussed, by the way, that level on the Nifty IT index was 31,000, which was proving to be a resistance and is continuing to prove to be a resistance. But yeah, since it's already oversold, the downside risk on this from this point onwards is fairly small. This is something that you can buy into from a positional standpoint, not expecting a V-shaped recovery, but stick to the big boys like TCS, Infosys. And if you want to dabble a little lower, then perhaps, persistent is something that you could consider. Even at HCL Tech is something that I can throw in the mix. But yeah, this is, that there might not be a very big downside from here on, at least, not from a very immediate perspective. So you could have a rebound in some of these names. And, that's something I would still treat as a bright spot. 31,000 is the mark on the Nifty IT index that I'm looking for to be crossed on a closing basis.
Right, Kush, thanks so much for taking the time and a pleasure speaking with you once again. Have a great weekend. Well, I certainly hope you do. All right. Well, at least you can enjoy your weekend. That costs nothing, right? Let's talk about something else. So let's talk about the earnings season, and which it shows a clear divergence between companies accelerating on revenue and profit growth and those seeing multi-quarter deceleration. Domestic-focused businesses continue to hold firm while export-linked sectors are feeling the impact, of course, because of that entire tariff turbulence that you saw in the third quarter. Jasmeet joining in to tell you about what he's picked up. Jasmeet?
Well, thank you for that. If you look at the overall Q3 angle, we did see a strong set of numbers coming in. And the Q3, we itself saw that it was the best quarter when we look at the last 12-quarter history. As rightly said, the export business saw slight pressure in Q3, but the domestic business held strong. Let's quickly understand, we have taken 10 stocks which have been doing, 5 stocks are doing really well in last 4 quarters, and 5 stocks are seeing a decrease in the PAT growth on YY basis. So here are the list of top 5 accelerated stocks that have seen a good growth in their PAT on YY basis. Starting with Jubilant Food, we see that from negative 6% growth up until a positive 43% growth in the Q3 of 26, the stock has seen a strong up move. Similarly, we have Polycab, we have Persist Systems, Max Health, and even the Home First Financials, which sees a good up move coming in. Something like a Jubilant Food will be in focus given from a negative to positive up move in terms of the overall PAT growth. Let's quickly understand what led to this growth in this particular quarter. Jubilant Food, we have the overall the Domino's expansion, which is lifting the revenue and profitability. Even the like-for-like growth is something that's helping the management grow further. But for something like a Polycab, their focus towards the wire and cable is strengthening further. The GST boost is something that overall pulled the momentum in the Q3 and the Q2 of this particular year. Further, the government's capex is driving the good for the company. While something like a Persistent System, the company remains in focus on the back of the AI-led deals, and the company has been investing in AI since a very long time, and they see a slight pickup coming in. That's why it remains in focus. While the fourth stock that has done really well over first 4 quarters is Max Healthcare. While the company sees existing units up ramping up for the company very well, as well the capex they have been doing for brownfield projects are also working well for the company. Well, now let's quickly move and understand the last one, that's Home First Financials. For this stock, we have seen that the strong disbursement rate as well as a strong NIM growth is something that's pulling the overall momentum for this particular stock. Let's quickly understand the valuations and the return potential. While among the entire set, we see that Persistent System had the highest return potential, 40-odd%. Well, this comes after the sharp fall in the Nifty we saw in this particular month. That's why the return potential remains high for Persistent System. In terms of valuation, we do see Jubilant Food at 108 times, slightly expensive, and something like a Home First Financials, the price to book ratio remains at 4.2, in the range of the other players as well. Now let's move on and understand the next set of 5 companies that have seen a degrowth in their overall PAT in terms of the last 4 quarters. Now Concord saw a degrowth, while we have Concord Biotech, we also have Kotak Mahindra, Crompton Greaves and Axis Bank, which grew from positive to negative numbers in this particular quarter. And what led to the overall default in Concord was the exam softness. The overall tariff uncertainty led to the overall fall. Further, if you look at the next aspect, we also have Concord Biotech, which saw a US tariff hit that impacted the PAT line as well as the margin expansion for the company. Further, they also faced a lot of other duties as well. Now, Kotak Mahindra saw low cost of deposit pressure and liquidity swings, which led to the overall volatility in the PAT performance. While we also have Crompton Greaves, which saw commodity price inflation, which impacted the margins and the bottom line end of the day on the back of the hurting the demand and the increased price hikes that have been doing in the quarters. Now, lastly, Axis Bank sees a wholesale-led mix, while weaker CASA ratio and the squeeze in the NMS, that's something dragging the overall theme for this particular stock. Let's quickly understand the valuation for these stocks. They remain in mid-20s to mid-30s in terms of valuation. In terms of return potential, we do see that even the potential remains in mid-20 to mid-teens for these stocks. The lowest potential being with the Axis Bank at 8-odd%, given the stock has already rallied in recent times. So all in all, we see good set of numbers coming in for Q3. It's a wait and watch of how does the decelerators turn in the coming quarters.
All right, thanks a lot for that, Jasmeet. But let's just pull out the stocks which are getting impacted by Bihar's MFI related announcement coming in, and let's pull out the majority of these NBFC stocks which I'd like to talk about. And Kunal, of course, let's just talk about Fusion Microfinance, Utkarsh Small Finance Bank. All these stocks have been falling in trade. Of course, the news flow is that the targeted entities of this bill are offering micro and small loans, and remember there is going to be some kind of a regulatory kind of a stronghold coming in, and brokerages have stated that this is sentimentally negative and we are seeing a big downtick coming in. Just wanted to get your view on that, Kunal. Fusion Micro, that's down almost 8% in trade right now. Good time to accumulate right now, or you'll wait it out?
I think definitely avoid at the current levels. 208, 2010 has been the strong resistance for the stock. Again, we were not able to close above that even in the previous trading session. So I think wait for it right now, get some clarity. If 210 is taken out decisively, then probably one can go aggressively long, and then you can see targets of 270 on the upside.
Views on this? Yeah, Neeraj, your views on this? The Bihar MFI impact?
Of course. Yeah, I think one should wait and get some more clarity on what kind of impact it can have on the listed entity, and then only take an informed view. I think let's not be the bad on the first day after this kind of announcement. Let's have a clear understanding on what kind of impact it can have.
Okay, so that's with regards to where microfinance companies go. Kunal, any quick view on the charts for all of these companies? Any buying opportunities?
I think not at the current levels for the microfinance space. Even if you look at all the companies chart as well, they have been rejection from the resistance zone. So let the dip play out, and then probably one can look to go on the long side, not at the current level.
Thanks a lot, Kunal and Neeraj, for your time, giving views both on technical and fundamental perspectives. But coming back to the market, last 15 minutes, we have seen a sharp fall coming in. Of course, dipping past that 25,200 mark, you can say it's a MSCI adjustment, or there can be algos also at play. But looking at Nifty Bank also, that's down almost 700 points, and Nifty 25,200. That's a very important technical level, already below the 200 DMA levels, and the decline in the broader market that has also intensified. Let's also pull out the mid cap and the small cap indices to show you where the fall is. It's not that much as compared to the large caps, but interestingly, small cap is holding up in this market. That means it's the third straight day of value buying or strength coming in the broader market. That's actually a good sign. But let's move on to the Nifty 50 companies, the constituents, how they are playing out. Is going to be very few names in the green, just 4 of them, 46 of them are in the red. Couple of IT names, but they have given the strength. But look at the sell-off. HDFC Life, Maruti, Dr. Reddy's, all these stocks are tanking in trade, all going past that 2% downtick coming in. Even the support from Reliance, that has also turned into red. Let's talk about the sectors, and largely it has been selling like a basket selling, we could say, but a little bit of strength coming in the consumer durables and the IT space. But largely we see the sell-off has intensified. The metal, FMCG, auto and realty, again the sell-off is turning big. Advanced decline ratio, let's just give you the entire picture of how things have panned out earlier. Of course, there was a gap, but the gap became bigger in the last 15 odd minutes. Now we need to understand whether this is the MSCI adjustment or is there something else at play. Of course, the weaker rupee is there and the support from FIs is still very much fluctuating. Also, we could like to point out the BSE 500 stocks to show you where the action is, and interestingly, there are some good gains also in today's market. And Tejas Networks, that's continuously seeing buying happening. That's up 17%. Reddington also seeing a highest 1 month jump coming in. Supreme Petro, LTTS, Sun TV, all the names which you haven't seen over the last 1 month or 2 months, they are seeing a rotation and buying, especially in the cash counters. Sell-off, of course, the NBFC is taking a big hit. All these 3 of them, Credit Access Grameen comes in, and even the capital market stocks, Angel One, CDSL, all falling in trade as well. So these are the 2 sectors where the sell-off was there. But of course, it's an end to the markets, but it's a very difficult and a sad ending, you could say, in last 15 minutes. But you should be prepared for what to watch out for during this weekend and on Monday. Of course, the GDP data comes in today at 4 p.m. and remember, this is the rebased data on GDP, so it will be very interesting to understand how it impacts the macroeconomy for the country, the government budget, the bank loan growth and forex. These are the important numbers you should be tracking. But for US also, there is a core PPI data coming in, which will give us a little bit of viewpoint at where the Fed's rate cut trajectory is. Corporate actions for next week, healthcare global, the rights issue is there. The ratio is 1:17. There's going to be a board meeting for the fundraise. So it includes Balkrishna Industries, Moltech Packaging, and also in the small cap space, 5 Paisa Capital. IPO listing back to the primary markets. Again, we are seeing Shriram Twistex and Clean Max Enviro as well. But remember, the grey market premiums I have checked, these are largely flattish of most of the larger primary issues. So definitely the sentiment is not very much upbeat even in the primary markets. But that's all, folks, for India Market Close. Stay tuned to NDTV Profit. Up next is Market Express.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक कॉन्सर्ट नहीं है. This is my life. This is my story. One night, no repeats. Book your tickets now.
First India tour in your city. Ragon with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Niraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
Hello and welcome. I'm Gargi Shetty and you're watching Market Express. This is the show that gets you all the headlines that you should be looking at this evening. But first, a quick look at the markets. Bears clawed on Dalal Street today with a sharp fall in the last few minutes of trade, with the Nifty slipping below 25,200. Sun Pharma and HDFC Life lead the fall in the Nifty. Sensex shed more than 900 points. Broader markets also traded with sharp cuts and ended the day in red. Now, the sectoral picture was tilted sharply in the favor of the red. Realty, FMCG and auto sector were the top sectoral laggards. IT, oil and gas on the flip side remained resilient and held on to a tinge of green. Brigade Enterprises has partnered with Primus Senior Living to develop 3 new senior living communities. The upcoming projects will carry a combined gross development value of about 750 crore rupees. 2 of these communities will be integrated within larger township developments, allowing residents access to broader social and physical infrastructure. Now, the partnership signals Brigade's continued push into the managed senior living space, an area seeing rising demand as urban families look for organized service-led living options for elders. The developments are expected to combine healthcare support, community-led engagement, and age-friendly design features. Ramco Cements has sold non-core assets worth nearly 60 crore rupees to Rainbow Foundations. The company plans to use the proceeds from this latest transaction to bring down its debt levels. Ramco had earlier announced in December 22 its intention to divest about 200 crore rupees worth of non-core assets. With this latest sale, the company has now disposed of non-core assets totaling over 1,080 crore rupees. The move forms part of a broader balance sheet strengthening exercise as the company looks to streamline operations and improve financial flexibility. Lupin's Goa manufacturing facility receives a voluntary action indicated classification from the US FDA. The inspection conducted between November 10 and 21st noted some observations but requires no further regulatory action. Now, this eases compliance concerns for Lupin, allowing the plant to continue producing for regulated markets without additional remediation. IDBI Bank could see a major foreign investor as Fairfax emerges as the front-runner to buy a majority stake. The 61% government and LIC holding is valued around $8 billion at current prices. Now, negotiations are ongoing, and if the deal goes through, Fairfax may consider merging IDBI with its controlling stake in CSB Bank. Zimbabwe has banned the export of all raw minerals with immediate effect, including lithium, a key ingredient in electric vehicle batteries. Now, the order applies even to cargo already on the way. As Africa's largest lithium reserve holder, Zimbabwe plays a crucial role in global supply. The move is likely to push up battery costs worldwide. And for India's growing EV market, the impact may be indirect but significant, as higher input costs could squeeze margins for car makers. Kansai Paint has outlined its India business strategy, laying out a clear roadmap across divisions. The company is targeting faster growth in non-auto industrial coatings while sustaining leadership in auto and refinish paints. Now, decorative paints will see steady but measured expansion. Management is sharpening its focus on profitability and market share, signaling a calibrated, segment-led approach to growth in India for the next 5 years. Morgan Stanley maintains an underweight stance on Kansai Nerolac with a target price of 191 rupees. The note highlights that while the company is pushing growth in non-auto industrial coatings, the strengthening auto offerings, decorative paints remains modest. Analysts caution that near-term gains could be limited even as management focuses on profitability and market share expansion. NBCC bags a 775 rupee crore order from the Delhi Development Authority. Now, the project involves redevelopment of staff quarters, marking a significant addition to NBCC's ongoing urban infrastructure work. Tata Motors' commercial vehicle business enters a cyclical upswing, says CLSA, which initiates coverage with an outperform rating and a target of 673 rupees. Now, analysts expect domestic demand to strengthen, while Iveco operations could benefit from emission norm changes in 2027-28. Now, strong consolidated cash flow should support a leaner balance sheet by 2028. Bernstein maintains an outperform rating on PB Fintech with a target of 2,200 rupees. Analysts see limited downside, noting only a drastic reduction in take rates could hurt earnings. AI disruption is nuanced, and PB Fintech is well positioned to lead in digital insurance solutions with a strong focus on maintaining its industry edge and long-term growth potential. Astra Microwave Products plans to demerge its space and environmental business into a separate entity. The new firm will focus on space and environmental monitoring, while Astra Microwave continues with defense electronics. Now, shareholders will get proportional stakes aiming to unlock value and improve operational clarity for both businesses. Sarda Energy and Minerals win Supreme Court approval to acquire SKS Power for 1,950 crore rupees under the Insolvency and Bankruptcy Code. Now, despite opposition from Torrent Power and Jindal Power, Sarda Energy emerges victorious in the bidding war and can now take control of SKS Power. The deal marks a major expansion and reinforces the credibility of IBC-approved acquisitions. MSTC wins an order from Coal India to conduct NRS linkage auctions for non-coal sectors like cement and steel. MSTC will facilitate the auctions and manage agreements through its platform. The order is set to run for 3 years, strengthening MSTC's role in industrial trading solutions. Now, March has historically been a steady month for markets. Over the last 10 years, the Nifty has closed in the green 8 times with an average return of around 0.8%. Strong gains of over 4% were seen in select years like 2016, 2019, 2022 and 2025. Mid and small caps, however, show a more mixed trend with modest average returns and sharp decline seen during volatile years like 2020. Now, sectorally, FMCG, energy and metals have tended to outperform in March, while IT and auto have lagged. Gaudium IVF made its stock market debut at a 5% premium on the NSE, becoming India's first listed IVF-focused healthcare player. The company operates over 30 centers on a hub and spoke model and plans to use IPO proceeds to open new IVF centers and repay debt. Now, financially, it has delivered strong margins above 40% with steady growth profit expansion. An expansion to Tier 2 and Tier 3 cities is seen as a key growth driver. However, high doctor attrition and dependence on specialized talent remain risks. Now, the listing gives Gaudium access to capital to scale in India's fast-growing fertility market. Jack Dorsey, co-founder of X, announces cutting over 4,000 jobs at Block, reducing headcount from 10,000 to under 6,000. Now, Dorsey says AI tools are reshaping how companies are built and run. Despite the layoffs, Block stock jumps 23% in after-hours trading, reflecting investor optimism. SEBI has tightened rules for investment advice shared on social media, citing a rapid rise in stock tips and market commentary online. The regulator says investors often struggle to identify genuine experts. Now, under the new rules, all registered entities must clearly display their name and SEBI registration number on their social media profiles and in videos. The norms also apply to agents and distributors across all platforms. The regulation comes into effect from May 1st, 2026 and is part of SEBI's broader Ease of Doing Investment initiative aimed at improving transparency and investor protection. Now, SpiceJet has suffered a major legal setback after the Supreme Court upheld a Delhi High Court order directing the airline to clear its outstanding duties of 144.5 crore rupees in a long-running dispute with senior technicals. Now, the top court refused to grant relief, reinforcing the earlier judgment that required the airline to honor its payment obligations. This ruling adds fresh financial pressure on SpiceJet, which has been battling cash flow challenges and multiple creditor actions in recent months. Zaggle has made a major push into the sports and entertainment space, signing a one-year partnership with Chennai Super Kings to provide corporate expense management cards for the IPL franchise's employees and associates. The agreement, disclosed in a regulatory filing on February 26th, marks Zaggle's formal entry into a new client category, expanding its footprint beyond traditional enterprises. The company says the deal is fully compliant with SEBI norms with no promoter-linked interest and the contract executed strictly at arm's length. The Hollywood power shuffle has taken a dramatic turn, with Netflix officially stepping out of the Warner Bros. Bidding war, leaving rival Paramount Skydance in a pole position. After months of high-stake talks and regulatory lobbying, Netflix says the price tag simply stopped making sense, especially after Paramount raised its all-cash offer to a level Warner Board deemed superior. Now, with Netflix walking away, the stage is now set for a tectonic merger that could reshape the entertainment landscape, from HBO to CNN to iconic film franchises. And Anthropic CEO Dario Amodei has rejected US Pentagon demands to loosen safeguards on the company's AI model Claude. Now, the Department of Defense reportedly asked Anthropic to permit any lawful use of its tools. Amodei said the firm would rather exit Pentagon contracts and allow use of its AI for mass domestic surveillance or fully autonomous weapons. He warned that such applications could undermine democratic values. The Pentagon has threatened to remove Anthropic from its supply chain. The standoff highlights growing tensions over how advanced AI should be used in national security operations. Now, more on Anthropic, the firm has rejected access to its flagship model Claude for companies linked to the Chinese Communist Party or the CCP, citing concerns about misuse. Now, the move blocks entities with ties to the CCP from using Claude's capabilities while allowing continued access for other users. Anthropic says the decision is part of its efforts to ensure responsible use of AI and prevent its technology from being exploited for harmful purposes. The development comes amid growing global scrutiny of AI governance and national security risks tied to advanced AI systems. And Jack Dorsey-led Block Inc. is cutting about 4,000 jobs as part of an AI-driven overhaul of its business. The layoffs affect various divisions as the company restructures to focus more on artificial intelligence and strategic priorities. Block says the move is aimed at streamlining operations and positioning itself for future growth, but it represents one of the largest job cuts in history. The decision follows similar workforce reductions across the tech sector as companies adjust to evolving technology demands and economic pressures. The company has started notifying affected employees. SEBI has changed how gold and silver ETFs are valued, moving from London benchmark prices to domestic spot rates. The new method, effective April 1st, 2026, factors in conversion, duties, taxes, and premiums, aiming for clearer, more consistent pricing that reflects that metals trade in India. Now, investors may see slight price shifts initially, but long-term clarity improves. Now on to some national news. In a major relief to Aam Aadmi Party's leadership, Arvind Kejriwal and Manish Sisodia have been cleared of all charges in liquor policy case by a Delhi High Court. The ruling also said that the evidence against him was insufficient to proceed. The court said the materials on record did not make out a prima facie case against Kejriwal. The decision comes amid ongoing legal proceedings involving several political leaders and bureaucrats, including Manish Sisodia. The CBI will continue to pursue charges against other accused, but Kejriwal is no longer a party to the trial at this stage. The judgment marks a significant legal development in the high-profile matter. President Draupadi Murmu undertook a sortie in the indigenous light combat helicopter Prachand at Air Force Station Jaisalmer. The mission was flown in a two-aircraft formation with the president in the lead helicopter alongside a senior Air Force pilot. The 25-minute flight included maneuvers over Gadisar Lake and Jaisalmer Fort and a simulated attack on a tank target. Now, the president said the experience filled her with renewed pride in India's defense capabilities. She also congratulated the Indian Air Force for organizing the sortie. And the Uttar Pradesh government has signed a 200 crore investment memorandum of understanding with a German rail infrastructure firm to boost railway development in the state. The pact was inked to enhance rail systems, technology and modernization across key corridors. The investment is expected to support improved connectivity, faster project execution and stronger logistical infrastructure. Now, officials say the deal will also bring foreign expertise into India's rail sector and strengthen bilateral industry ties with Germany. The MOU signals renewed focus on expanding and upgrading UP's rail network to support economic growth and mobility. Telangana government is considering a new law that could penalize children who neglect elderly parents. Now, under the proposal, employees including government workers may face salary cuts or penalties if they fail to care for or support aging parents. The move comes amid rising concerns over elder neglect and the need for better care structures. The draft law aims to make family members legally responsible for the well-being of senior citizens. Critics question enforceability and privacy issues, while supporters say it reinforces traditional social responsibilities. The bill is still under discussion and details are being finalized. And a strong earthquake rocked Kolkata as parts of eastern India, sending tremors through offices and homes and prompting evacuations. Citizens reported shaking across the city, leading to precautionary exits from buildings. Early measurements suggest a high-magnitude quake with reports of shaking felt widely. There are no immediate reports of major damage or casualties, but authorities are assessing the situation. The quake was also felt in surrounding regions, unsettling residents and triggering safety protocols. Emergency services are on alert and more details on the quake's epicenter and impact are awaited. Police have arrested 9 people in connection with a massive 1,500 rupee crore multi-state cyber fraud case. The arrests follow a detailed investigation into an organized gang that allegedly duped hundreds of victims through online schemes and digital platforms. Now, authorities say the accused used high-tech methods to siphon money from bank accounts and mobile wallets across several states. Searches were conducted at multiple locations, leading to recovery of digital devices and incriminating evidence. The investigation is ongoing and more arrests may follow as police work to trace funds and dismantle the network. Now, Uber is accelerating into autonomy. From self-driving vehicles in Dubai to electric air taxis preparing for launch. Our executive editor of Auto, Siddhartha Sharma, checks out how the company is shaping the next wave of mobility.
What we witnessed here in Dubai was a test flight of that. That is a vertical takeoff aircraft that will be used as an air taxi in Dubai to cut down commute times that take hours into just mere minutes. The partnership with Uber will define the next step of mobility, and prices, as they say, will be very similar to what you pay on Uber Black.
Dubai will be among the first global markets expected to see a commercial rollout of Joby's air taxi in partnership with Uber.
Joby Aviation is a California-based aviation company that has built this. This is a vertical takeoff aircraft that's beginning passenger operations later in the year 2026.
Joby's aircraft can carry 4 passengers and a pilot, travel up to 160 kilometers and reach speeds up to 322 kilometers per hour. Flown by a certified commercial pilot, it offers a remarkable way to travel above the city and experience the next generation of flight. Joby's aircraft uses 6 tilting propellers to take off vertically before transitioning into a forward flight. In 2021, Joby acquired Uber's Elevate division, and in 2025, Joby acquired Blade's passenger businesses, which flew more than 50,000 passengers in the year 2024.
So we're launching here in Dubai in 2026. We'll be in the US next. We've got New York, we've got LA, but we're looking at London and Japan, and of course we have India, and just the amazing opportunities there as well. So we spent 15 years designing this aircraft. A lot of it is the very first principles around safety. You'll notice that it's got 6 different propulsion units. If you compare that to a helicopter, you know it's got 1 rotor, right? So this has a lot of redundancy, far more than others, so that when we launch later this year, people can be assured it's safe.
Being an all-electric aviation vehicle, the rotors on this one are also engineered to be super duper silent. So this is very non-invasive. The decibel levels are also super low. And when they fly all over the city in the future, you will not hear them that loud in the skies.
Uber and Joby plan to integrate air taxi mobility services directly into the Uber app, allowing users to book electric air taxi rides seamlessly in the future.
As EV mobility expands from roads to the sky, the Uber model is also evolving and having those multiple layers when it comes to mobility and transportation in the future.
And viewers, that's a wrap on this edition of Market Express, but do stay tuned to NDTV Profit for more news and updates.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक कॉन्सर्ट नहीं है. This is my life. This is my story. One night, no repeats. Book your tickets now.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you The investor don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Market ends over 1% lower as Nifty erases all monthly gains. Nifty IT suffers worst ever fall in February. Benchmarks underperformed the broader indices for the month. Government to release Q3 GDP data with new base year as it shifts base to 2022-23 from 2011-12. Revision aims to reflect structural shifts in the economy. Fairfax is the front runner to buy a majority stake in IDBI Bank. Reports say that the talks are ongoing and Fairfax's investment could become the largest foreign investment in Indian banking. The Supreme Court rules in favor of Kalanidhi Maran and KAL Airways directs SpiceJet and Ajay Singh to deposit 144.5 crore rupees to Maran. Also imposes costs of 1 lakh rupees on Ajay Singh. Zimbabwe bans exports of critical raw materials and lithium concentrates. Suspension applied to cargo that's already in transit and will remain in force until further notice. May impact Indian EV companies. Canadian Prime Minister Mark Carney arrives in Mumbai for his first official visit to India. Over the next 2 days, Carney will engage with a wide range of Indian and Canadian stakeholders. Pentagon gives Anthropic a Friday deadline to drop its safety limits or lose a $200 million defense contract after Anthropic's refused to let its AI be used for mass surveillance or fully autonomous weapons. Netflix paves the way for Paramount to take over Warner Brothers Discovery as it declines to raise its offer to buy the company. Netflix said the new price it would have to pay would make the deal no longer financially attractive. Hello and welcome viewers. A very good evening. This is Profit 360 on NDTV Profit and I'm your host Malika Mishra. Along the next half an hour, we'll take you through some key updates on markets, national as well as international news. Let's begin with focusing on the Dalal Street. Markets came under sharp pressure this Friday with the Nifty 50 slumping nearly 1.3%, dropping about 100 points in the last 5 minutes to slip below 25,200. That was a dramatic sharp fall. The BSE Sensex also shed over 1.18%, losing close to 1,000 points. Selling was broad-based. Let's go across to my colleague Jasmeet for a complete market roundup.
Well, market ends in red. Today we see a massive fall coming in the market in the last 30 minutes of trade. Now, what led to the fall was a weaker MSMI adjustment impact on the closing trade. Further, we also had a key long-term technical level which breached the Nifty. Further, weak rupee and FII selling is something that impacted the Nifty in the final half an hour, and we saw Nifty fall and end in red. Now, talking about the monthly picture of Nifty, over a month Nifty ends in red. It erases all the gain it had done during the month and gains about 0.5% lower in trade. But in terms of this performance, we see Nifty ends in red for the third consecutive month in a row in Feb as well. For the Infosys and Tech Mahindra lead the fall in Nifty. Both were down about 22% in the month of Feb, while the fall in IT stocks comes on the back of that anthropic fear which came in the beginning of the month, impacting the overall IT pack, and Nifty IT is down about 16 or 19 odd percent during the particular month. For the broader market outperforms the benchmark. If we look at Nifty Midcap 150, it ends in green 1.5% higher, and Nifty Small Cap 250 again ends in green at 0.75% higher. In terms of the overall sectoral performance, we saw that Nifty is the sector which Nifty IT is the sector that lost the most in the month of February, down about 20 to 22 odd percent. And in terms of the Nifty performance, we said Nifty IT sees its worst monthly fall since September 2008, and Nifty February, the 50 IT's February month marks as the worst Feb month ever for Nifty IT. In terms of the other performance, Wipro fell almost 14% in the month of Feb, seeing a worst fall in last 4 years, while Infosys fell over 20% in the month of Feb, marking its worst ever fall in last 13 years. All in all, the market ends in red in the month of Feb as well.
Thanks so much for that, Jasmeet. As bears really tightly hold the markets at a time when investor confidence is shaky, investment expert Kenneth Andrade remains selective when choosing companies and sectors. The expert said that India must rely on finding newer markets to grow and that the country is currently stuck in single-digit earnings growth. He was clear that there is no great good news for 2026. Listen in to know which sector he wouldn't give any exposure to if he had to build a portfolio today.
If I had to build a portfolio today, it will have no IT in it. It doesn't mean that we are bearish on where the cycle is. It's cheaper than it's ever been. That's a positive. But we'll just have to recalibrate business models to see what will make us a large amount of money in the next decade. So we will get back in at an appropriate time with and more importantly, with an appropriate business.
Viewers, historically, March has been one of the steadier months for the benchmark Nifty 50. Over the past decade, excluding the extreme 2022 COVID crash year, the Nifty has closed higher in majority of the times. Now, this signals positive seasonality as the financial year ends and winds down. In contrast, though, mid-cap and small-cap indices have shown a more mixed record in March. Broader market segments like the Nifty Mid-Cap 100 and Small-Cap 100 indices have posted average returns closer to flat or slightly positive. So before traders rush to position for the month ahead, it's worth taking some clues from history. My colleague Somit joins us with a full detailed picture on March seasonality, including charts, sector trends, and what it could mean for 2026.
Well, Feb has been quite volatile, but March seems to be quite stable and on the positive side. In fact, if you look at the last 10 years of March month, then we have managed to close in green nearly 8 times, while the average return is 0.8%. Now, this average return is on the lower side because COVID 2020, that was the COVID March 2020, was one of the years where we had impacted very negatively, and hence the average return is on the lower side. But 8 out of the 10 times we have managed to close in green. We have seen positive returns of 4% plus in 2016, 2019, 2022 and in 2025 as well. Now, when it comes to the mid and small cap indices, they have managed to close in green 6 times. Average returns for mid cap is positive 0.3%, while for the small cap is negative 0.5%. We have seen positive returns of more than 4% in 5 instances: 2016, 17, 19, 2022 and in 2025. And as I was mentioning, that March 2020 was the COVID month, and that time we had seen a sharp fall. Mid-cap index had fallen nearly 30%, while the small-cap index had fallen nearly 37%. And because of this, the average return is skewed on the lower side. But if you remove this, then the returns were much better compared to what we are seeing right now. If you look at the sectoral indices, Nifty FMCG, Nifty Bank, Metal and Energy indices have managed to close in green 7 out of the last 10 March, and the gains have been anywhere between 0.2 to 2.6% for this indices. Apart from that, if you look at the other indices like pharma, real estate, IT and auto, they have managed to close in green anywhere between 4 to 5 times. Pharma and real estate have seen positive returns, while IT and auto have seen negative returns in the month of March in the past history as we have seen. Now comes the most interesting part, this is stock specific action. Now these are the stocks that have closed in green 7 times and have seen a return of 5% plus on an average basis. So which are those stocks? Adani Energy has seen an average return of 13% in the month of March. Solar Industries, CG Power, Indigo have seen returns of anywhere between 7 to 10% on an average. Adani Enterprises has an average return of 7% in the month of March. Apart from that, there are stocks like Torrent Power, NHPC, APL Apollo, Nestle and Adani Ports which have seen average positive returns of anywhere between 5 to 6% in the month of March. On the flip side, these are the stocks that have managed to close in red 7 times and have seen negative returns of more than 5%. Vodafone Idea tops the list here with an average negative return of around 10%. Inox Wind, Apollo Hospital, IDFC First and Samvardhana Motherson have seen a negative return of anywhere between -5 to -6% on an average basis in the month of March.
Thanks so much for that, Somit. And viewers, the breaking news of the moment that economists had been tracking and waiting for, Q3 GDP and GVA growth has come in at 7.8%. And this is versus the estimated figure of 7.6%. Now, remember what is special about these numbers is that they've been calculated based on a new base year. Earlier, GDP series were calculated based on 2011-2012 base year, but now that gets revised to FY23. So it's more updated, and that's how it's been calculated. This, in fact, is the first GDP number out from the new base year, and that's come in at 7.8% versus the estimated figure of 7.6%. So a bit higher than what was estimated. GVA is gross value added, and it is basically it is calculated as the total output minus intermediate consumption, which is cost of production. And viewers, again, as I said, what is special about the series is that it is the first GDP numbers out based on the new base year. I have my colleague Shrimi Chaudhary joining us to give us a sense of how these numbers look like. Shrimi, the GDP has come in at 7.8% versus what was expected around 7.6%. How do you read this? Okay, there seems to be some error with Shrimi's connection, but as I was trying to address that the Q3 GDP and GVA growth is at 7.8%, and we had been waiting for this. In fact, we had planned coverage for this. Shrimi is back with us, I believe. Her connection is back. Shrimi, the Q3 GDP numbers have come out, and it has come in at 7.8% versus the estimated figure of 7.6%. That means there's been a bit of improvement from what was estimated. How do you read these numbers?
I can't hear.
Okay, there seems to be some connection issue. Shrimi, can you hear me? Okay, while we fix that and we get you more details, I would like to take you through the latest GDP numbers. In fact, we have more numbers coming in. Q3 GDP growth has come in at 7.8% versus the estimated figure of 7.6%. We in fact have Mr. Govinda Rao, economist and former director at NIPFP and former member of 14th Finance Commission, Government of India, joining us on the phone line. Thank you, sir, for joining us. How do you read these numbers, sir? 7.8% GDP growth based on the new base year.
Well, I mean, these are expected in some ways because, after all, you don't have, when you revise the base, you don't get the same numbers. When you revise the base, obviously, there will be changes. There will be new data that will be used, new methodological improvements will be there, and the coverage will be much better. And obviously, there will be marginal changes in the growth rate. It will not be very large, but then nevertheless marginal changes in the growth rate. But when you do it at the current prices, the absolute numbers in current prices, when they go up a little, that will also have impact on a fiscal deficit.
Okay, all right. So, sir, what kind of impact do you think it would have on fiscal deficit? And of course,
Impact in the sense that for example, the budget estimates the fiscal deficit of 4.3% at the union level. Now, if the denominator goes up, to that extent, the fiscal deficit numbers will come down. Budget expects that next year it will be 4.1%. Now, this will help, in reaching the target also. In that sense of the term, the Ministry of Finance will be on a much more comfortable plane.
Okay, all right. And since you were mentioning the fiscal deficit data, I'd just like to inform our viewers that the April-January fiscal deficit has come in at 9.81 lakh crore rupees, and this has reached about 63% of the financial year target. So now that the fiscal deficit stands at 63% of what was targeted, how do you read this in light of the new GDP numbers?
No, it would not have an impact on that because fiscal deficit numbers are fiscal deficit absolute numbers. As a fiscal deficit as a percentage of GDP, when you target, you have a 4.3%. If the revision is higher by about 10%, the target it gets reduced by about 10%.
Okay. So it is also expected that these GDP figures tend to, in some form or the other, influence the monetary policy decisions as well, as it is a key indicator of the economic health of the country. With 7.8%, how do you think that factor would be influenced?
You see, the most important factor which impacts the monetary policy is inflation. And inflation numbers are already out, revision has already been done, and inflation numbers are already out. Of course, when monetary policy is done, they take into account both the inflation and the growth scenario. So since the growth scenario is better, their fight against inflation will be stronger. But so in that sense, what is likely to happen is that they are likely to hold on to the rate rather than reduce the rate. You see, if the growth situation is not very good, there is an incentive, there is a motivation for reducing the interest rate so that investment picks up. That is not really necessary at this particular stage.
Okay. So before, sir, I try to understand how you see the growth rate, I would like to test back my colleague Shrimi's connection. I'm hearing that she's back with us. Shrimi, if you are back, give us your inputs on the GDP numbers as you see them.
Yeah, sure. As the the prelim number which I could see came out just now, of course, it's a major development. We will have now new GDP series based on 2022-23 is the new base year from earlier 2011-2012. So that's very important development for sure. But couple of numbers we need to keep in mind. One is, of course, your real GDP number, which is they estimating to grow by 7.6% in FY26. This is second advance estimate. And if you remember, the first advance estimate has actually projected the fiscal year growth outlook at 7.4%. Now, come to that, your nominal GDP number as well. It's showing 8.6%, of course, increased from the first advance estimate, which was around 8.1%, if I remember correctly. A couple of more numbers are, highlighted here, which we should note, and it's very important. Your Q3 number, the Q3 number is coming at 7.8%, more or less in line with the second quarter number. Actually, second quarter was at 8.2%. First quarter was at 7.8%. So what the reasoning giving for this raise in the overall GDP number is essentially the quarter 3 number, which they are saying now growing at 7.8%. And the second quarter number, they revised to 8.4%. Earlier, it was 8.2%. So clearly, the upward revision is coming forth under this new base series. So these are the important numbers. Now moving to the nominal GDP, which is again equally important because that decides the tone of the budget and the budgetary estimates that how they're going to kind of pan out and translate into the budgetary estimates of the next financial year. So that's very important. It's coming and estimated at around 11% and 9.7% for 2024 and 2025, and it's important because they again revising it upward if you see the number on these fiscal year respectively. Now, manufacturing sector they are talking about, it's again very crucial because as we know, manufacturing contribute around 16 to 17% in the overall GDP. What this number is hinting at that they have, they are actually the major driver in contributing to the economy from past 3 consecutive financial years. So it's very, very crucial, and all those reforms which have been taken in past few years, especially in the last 2 budget, is going to push the manufacturing sector to, reach that aim of 25%, which government has been eyeing on. Importantly, your secondary and tertiary sector, very, very important. Again, all your financial services, etc., all those sectors are coming at 9% growth in FY26. So again, upward revision has been reflected in this number as well. But something we need to keep this in mind that this time under the new base series, the rebasing of your GDP number, what they did is actually to incorporate all those numbers, all those numbers which were actually not part of the previous series. You have new economy, you have digital economy, you have quick commerce numbers, all those, you have gig economy as well. So all those were incorporated under this new series. So that's very, very important, because it's reflecting how your consumption pattern has been in past 10 years. So it's crucial from that point of view, and of course we need to see and watch out for that, how this is going to change the concern around which was raised by the rating agency, raised by the IMF as well, on the methodology which they try to change, because government is expected to review your GDP every 5 years. So going by now what they are released today, they are going to review that after 5 years as well, and that process and that exercise has to continue. So this is very, very crucial and a major milestone, I would say, in terms of the overall economy and the way it's panning out. It will have impact on all those numbers actually you have seen under the old series.
Okay, all right. As you highlighted, Shrimi, it's not just important from the point of view of the GDP, but the government has taken to its motive to revise the base years for all 3 statistical indicators, economic indicators, which are your GDP, your IIP, and your CPI, that tend to influence budgetary expectations, allocations as well. We have Mitali Nikore, founder and chief economist of Nikore Associates, joining us at the moment. Thank you so much, Ms. Mitali, for giving us your time. My first question to you would be, how do you read a 7.8% GDP, and how do you think this would influence the financial year growth in the coming quarters?
Absolutely. I think today is really a big achievement for the economics and statistics community of the country, because not only have we delivered good GDP growth, which I think we've been delivering for almost 10 years, but we've also delivered good GDP data, or rather I would say improved GDP data. India's GDP data should never have ever been under question. It's a vast country, and collecting data from all over the country is always a massive exercise. And I think, I want to give my compliments to the Ministry of Statistics and to the National Statistical Organization for doing this. Looking at the data, 2 or 3 trends, really jumped out at me, which I really want to highlight to the viewers. The first one is really the manufacturing story, which I think is front and center in this entire press release and data that has been presented to us, because we can see that not only has manufacturing been rising for the last 2 years, which itself itself is a big achievement. Sitting at around 12.7% in 2023 and then 9% again in 2024. But the second advanced estimates for 2025-26 are showing manufacturing growing at nearly 11.5%, and manufacturing's contribution to GDP also rising to 15% under the new series, from 13% earlier. So I think a lot of the activities which were getting missed out previously, and we've seen this with the methodology improvement. In fact, it says so in the detailed methodology that there was a huge amount of unincorporated enterprises and manufacturing activity that was not getting accounted, and now that has been included. So I think that's really something that stands out. And the second area that really stands out is trade, because we can see trade, hotels and restaurants, that entire service category, and logistics growing immensely fast. We're seeing a 10% growth rate coming in this year, a huge jump from the 6% last year. And again, this is one area where we've seen that the methodology improvement starting to reflect in the improved growth rate. So I think really on manufacturing and trade, the two sectors where the government has put in a thrust and put in the infrastructure investments starting to bear fruit.
Yeah, hi, this is Shrimi Chaudhary. Wanted to understand from you, Mr. Govind Rao, on the fact that double deflation is one of the key area and kind of concern which has been raised by even IMF as well as part of methodology. And this time, the new series adopting that. So how crucial you think is be the part of this new series, and how this will change the entire dynamics?
Well, I think, when you have, with the better improvement in methodology and the coverage, sort of, if you have, obviously the wholesale price index was showing, sort of a negative numbers for some time. But that's not the most important thing for me. As a fiscal expert, what I see is, the cumulative impact of this revision in 2023, 24, 24, 25, and 25, 26 on the debt numbers, because see, after all, you are dividing the total, debt with the sort of GDP numbers, and I'm sure that debt numbers will show will be much lower than what it was reported. Just as deficit numbers would be, and then the cumulative impact of that will be substantial. And target for the 2030, which the finance minister has given in the budget speech, possibly she will have to relook, because I think the debt will be even lower than debt. Either we will be able to reach it much faster, or it would be better to reduce the debt even more.
Well, the fair point. Also wanted to understand, Mr. Govind Rao, that, the middle term GDP was revised to 7%, quite an aggressive one from earlier 6.5%. After this new series, which has kicked in today, do you see the impact coming on that figure as well, as far as GDP for medium term goes?
Well, it would be, but as I said, with particularly manufacturing and the service sector showing a better, growth rate, it's certainly, sort of, the prospects are much better now, and sort of. But as I said, my focus will be much more on the nominal growth, GDP numbers, and how they look, because much of the fiscal target numbers will depend upon the nominal GDP numbers.
True. Quickly, Matli, just wanted to understand, since you know that how IMF has also kind of flagged and in fact put India as C grade on the methodology part, do you think that they are going to kind of change their ratings since India has now adopted that methodology and we have now double deflation? incorporating in the new numbers?
Hi, Shrimi. I'm assuming that's for me. Definitely, I agree with you that the IMF will have to reevaluate exactly how this new double deflation method, which meets a lot of the IMF standards, especially on transparency, actually is going to impact India's GDP growth numbers, and also the methodology that we're putting in for the data collection itself. Because if you just break down what is double deflation, I mean, honestly, it should not be. I personally believe that all terms should be broken down for the for everyone to understand. It essentially means that you deflate not just the output amount, down to a real number, but also the inputs. So if I'm calculating what is the output associated with a car, I also make sure that all of the auto components are also deflated when I'm calculating the output contribution of a car. Now, essentially, the IMF has always advocated for this methodology, and that absolutely makes sense. India has now adopted it as well. So, definitely, we can put in a call for a review. The government of India can put in a call for a review, and also, look at reviewing India's rating. However, my main contention, and this is my personal opinion, is that it takes a lot of time for these international organizations to often catch up with the methodological advances that individual countries make. And therefore, it makes sense for India to leverage other forums like, for example, the G20 as well as the World Bank to basically socialize the methodology that India is now using for GDP calculations, because that could actually help global South countries also align their processes. And India today is in a space where it can offer statistical advice to a number of global South countries for improving their GDP calculations and estimation methodologies.
Well, thank you so much, Mitali Nikore and Govinda Rao, for joining us in this breakdown of the new GDP series. And of course, viewers, the inputs are extremely important of both the guests, as they highlighted that this is a reflection of how India calculates its economic indicators in a new fashion with new weightages of new consumption patterns. That's all the time we had on this edition of Profit 360. This is Malika Mishra. Keep watching NDTV Profit.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक कॉन्सर्ट नहीं है. This is my life. This is my story. One night, no repeats. Book your tickets now.
First India tour in your city. Rag on with Shankar Ehsaan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
Alright team, our new auto show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice,
the latest trends. It's a lot simpler. We'll help people make the right auto decision.
It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Niraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Where perhaps the databases are getting strengthened over time. In countries which are more advanced, the negative or the positive changes are much lesser, which is what we want to mention and which is what we have seen even in India. What does the base revision entail? Essentially, there are four basic changes that happen. One is we incorporate new data sources. Second, we capture the structural changes in the economy more effectively. The third, there are some methodological improvements which are more technical and statistical in nature. And the fourth is that we ensure that if there have been any changes in international standards, changes in definitions, we incorporate that. And it is precisely these four activities is what has been seen in this base revision also. We also review the national estimates both on the production side and the expenditure side, which is the way we calculate the GDP. And the third area that we have given a lot more focus in this base revision is on having more granular availability of data so that the state domestic product is captured much more effectively. And also we are moving towards better estimations of the district domestic product, which we hope to work with the state governments over the next few months as we move ahead. I'll briefly just mention on each of the four aspects what are some of the major changes that we have done. First one is on new data sources. There are a number of changes, but I'm just highlighting three of them. One of them is that because of digital expansion, Digital India, we have a lot more digital data that is there. And the activities or the methods that are used to capture data have improved. One of them is that the Ministry of Corporate Affairs now mandates a form which is called MGT7 or MGT7A, which also gives for each company what are the main activities that they are engaged in. One of the criticisms that had been mentioned was that because of the way we got the information about corporates, we allocated the revenue or the profits of companies to the main activity. Now we are able to distribute it across all the activities that any corporate is actually functioning in. So therefore, we get a much more granular picture of what each sector is doing. The second thing is that up till now, we were using different indicators for the informal sector because we did not have a specific survey for the informal sector or the unincorporated sector. Now we have two. One is the ASUS, which is the annual survey of unincorporated sector enterprises, which is done annually. We've done 3 editions already. And the second is the periodic labor force survey, which we now bring out monthly data, which gives us an idea of what are the activities and occupations that people are involved in, and what are the kind of wages they're getting, and what is the kind of value addition in that. In the earlier series, we used to do it in the base year and then use indicators to move it from year and year. Now we actually have surveys which are so much more granular, and therefore will capture these activities much more effectively. And the third is obviously the household consumption expenditure survey, which we did two back to back. And these will help us to benchmark the estimates of per capita consumption, which is what the HCES effectively does. And since we have two surveys, that will give us a much better picture. The second aspect is we have much greater administrative data. I mentioned about the digital penetration that has increased, and administrative data is something that we are trying to use much more effectively rather than focusing only on surveys, because this data is much more real time compared to others. The first is the enhanced use of GST. GST was not available in the last round of revision in 11-12, which has come up in 2017. And this will also help us in more ways than one. It also gives, captures not only data of the formal sector, but even in the enterprises which may be informal but have larger revenue turnovers, it gets captured in this. And the second is that it gives us much better picture of the state-wise consumption that is happening, and that will help us in the allocation of state-wise when we give the GSDP. The second is the PFMS data, which gives an idea of government expenditure right up to the village level. And this is real time, and the PFMS, the introduction of PFMS, it's actually based on expenditure that actually happens. So this public financial management system reduces the errors, reduces the time, and also ensures that effectively we are able to allocate it granularly to the state or the area in which it happens. And the third sector is we have a lot of data. For example, e-Vahan data gives us up-to-date information of what is the kind of vehicles which are on road. We have better information. In fact, from rail transport data, we have actually the number of tickets sold from which distance to which distance. We don't have to do estimations. Now it's actual data, same with air, and same with the LPG fuels. So all this gives us much regular data, granular data, and much more effective data, and therefore increases the robustness of the estimates that we make. On the methodology part, I'll just focus on two aspects. One is on the use of double deflation. This has been a major issue which has been raised over in various discussions and critiques which have been published. We are doing away with single deflation across all sectors. Double deflation would be there fully in the agriculture and manufacturing sector. In agriculture sector, it already was. In manufacturing, we are introducing it. Given the granularity of information that is needed and the data that is needed. And double deflation means that we are deflating the input side and the output side with separate deflators based on the products that are actually being used on the input side and the output side. We could not do double deflation earlier because that granularity of data was not there. If I can also mention that in the earlier series, we were using around 180 deflators. Now we're going to be using somewhere around 600 odd deflators, which reflects the granular deflations, and there are a mix of both CPI and WPI. Let me again reiterate, we don't use headline numbers in any case anywhere. The second issue which had been raised periodically is the discrepancy which was there between the production side estimates and the expenditure or the consumption side estimates. In the new series, we will be publishing supply use tables regularly, which will ensure that the discrepancies are eliminated. It's not only just reduced, they are eliminated because there will be clear supply use tables going ahead. Coming to the numbers, You would have seen now, I'm talking of the base that is at 22-23, the year 22-23. What are the major changes? At the overall level, as per the revision of numbers, the 11-12 base had the GDP of 22-23 at 268.9 lakh crores. In the new base, there's a reduction of about 2.9% at 261.2 lakh crores. Why has this reduction happened? The sector-wise detailing has been given. In the primary sector, there has actually been an increase of 6.1%. And this reflects essentially two aspects. One is that there has been a significant reduction of diesel in the agriculture sector and replaced by electricity, and more so by solar electricity. And this is the impact of the PM Kusum scheme. So that means that the value added available to farmers is increased because of reduction of the fuel costs for farmers, and that's a direct increase of farmers' income, and it's reflected out here. And the second reason is that there has been a shift to more value-added agriculture, fruits, vegetables, dairy, fish, and which is also shown in the household consumption. The consumption has increased. So on both those counts, there has been actually an increase in the primary sector. The second in the secondary sector, which is manufacturing, construction, etc., we have now much greater segregation of the multi-activity corporations. So some of those activities which were actually in the secondary sector have moved to the tertiary sector because they were related to services. And we may also note that within this sector, there have been certain sectors like electricity, gas, apparel, food processing, which have actually increased. So there are two reasons, obviously, a multi-sector allocation between tertiary and secondary, and that in certain subsectors, and the details are there in the press release, you would get that there have actually been increases. And the third is that in the tertiary sector, which captures a lot of the also unincorporated or the informal sector, we have annual surveys available which show that greater granularity of data is available, which is getting reflected. But I may mention that one sector especially has shown an increase of nearly 10% value added, and that's the housing sector, which reflects that an own dwelling services, that the number of people living in their own houses has substantially increased, reflecting an impact of schemes like PMAY, where housing and housing related services, people staying in their own houses, which has led to this increase. Details, of course, we can discuss. The financial sector has also seen an increase, and that's because there's an expanded coverage of the dynamics of the non-banking financial companies. This is now coming to the growth rate of 23-24. As you would see, there is an overall reduction in the growth rate, in the real growth rate of 23-24, which partly is due to the base effect changes that are happening. In the primary sector, it is more or less what was projected earlier. In the secondary sector, in fact, the double deflation has led to an increase in value added, which was one of the issues that used to be raised, that perhaps lack of double deflation is in a way expanding numbers. It's perhaps the reverse. And tertiary sector too, there is a slight correction in the secondary sector, which is essentially related to we having now surveys to have captured data so much more effectively. Even in that, there are certain sectors like trade, services, repair, air transport, where the numbers have actually increased. 24-25, there is actually a bump up in the GDP figures to 7.1% from the earlier 6.5 by an overall 0.6%. This reflects that, sorry, I haven't changed. Sorry, I've gone. Yeah. This is okay. So, so this reflects this bump up there is, and it's there in all the three sectors. The reasons are similar, so I'm not getting into that. But the real GDP growth in 24-25 is actually higher than what we had initially predicted. This is the share of the broad sectors. As you can see, the primary sector is actually increased by 2%, which is for the reasons I had mentioned, which is reflected from the 22-23 data and change in the series. On the expenditure side, this is the share of private final consumption. I would just like to mention the fact that gross fixed capital formation has consistently stayed high at around 31%, which reflects also the focus of the interventions that have been done over time. These are the revised quarterly estimates, both in terms of lakh crores and the nominal GDP estimates. Sorry, both in real and nominal. The Q3 figure is a new figure which was not there earlier. Q1 and Q2, we had the 2011-12 figures. Q3 is coming out at 7.8%, with a nominal growth in Q3 at 8.9%. If you would compare, you would see that there's some changes in the nominal also, which reflects the impact of the double deflation, which has broadly been positive. And finally, these are the new series annual estimates. If we look at 23-24, it is at 7.2%. 24-25, the first revised estimates are at 7.1%. And the second advanced estimates are at 7.6% compared to 7.4%, which is what we had mentioned in early January when we had released the first. You would see that in all the 3 years, last 3 years, the growth rate, real growth has been over 7%. And the nominal growth rate over the last 3 years is averaging above 9%. And that's very important because these are the numbers when we talk of achieving Viksit Bharat 2047. The numbers being talked about are between 7 to 8% real growth rates and between 9 to 10% of nominal growth rates. So I'll stop here and over to you, Mr.
Thank you, sir. Thank you for a very informative presentation. Now I request Chief Economic Advisor, Dr. V. Anant Nageswaran, sir, to address the media.
Thank you. Thank you, Dr. Saurabh Garg. Respected friends from the media, colleagues, thank you very much. And Dr. Saurabh Garg has shared with you the methodological changes, the revisions, and how the performance of the economy has been in the last 3 years, plus the first 3 quarters of the current financial year. We normally do this presentation also every quarter. So we are going to basically take off from what he has said and share a few slides on how we see the 26-27 numbers look like in the light of all these revisions, and also the fourth quarter, given how the high frequency indicators have performed in the month of January, etc. So this slide, I don't need to repeat what Dr. Saurabh Garg showed. On the left side, 3 consecutive years of plus 7% GDP growth, which kind of also corroborates and vindicates our revision to the potential GDP of the economy to 7% or around that number. On the right side, what you see is the comparison of India's performance with several other economies. As we have been noticing in the post-COVID era, the sustained non-inflationary expansion of the Indian economy has held up not only in absolute terms, but also in relation to how others have been doing in the post-COVID era, where they're also struggling with the rising public debt and lower growth, etc. And in terms of the gross value addition growth rate, we are seeing, as again, this is a repetition of what Dr. Garg presented. We are showing most of these numbers on the left side in terms of growth rates and constant prices, and the share of GDP on the right side in current prices. So the growth rates of agriculture sector on the blue and the services in green color and the manufacturing, those numbers tell their own story. The manufacturing growth rate has been quite exemplary in the last 3 years, and the share of GDP broadly remaining the same, with agriculture going up slightly, and these are as in the current price series. Services sector is slightly down. And if you look at the growth rates of various expenditure components on the left side, private consumption, government, capital formation, exports and imports are shown on the left side. And in general, broadly speaking, by simply eyeballing these numbers, you can see the growth rates of investment have held up. These are basically, let's remember that the FY26 numbers are second advanced estimate. We still don't have the full year's numbers. So based on this, what we are seeing is that overall the private consumption growth rate is quite resilient. Rural consumption has been quite strong. Urban consumption is recovering on the back of the direct and indirect tax relief provided in the course of calendar year 2026, and so on. On the right side, as a share of current prices, private consumption has come down slightly, but in its place, investment ratio has picked up as well, quite well. And then if you look at specifically breaking down the granular data that MOSPI provides up to 24-25 now, in terms of how capital formation stacks up across various sectors, public, private, financial, non-financial, government, households and unincorporated enterprises. You see it in the tables for 24-25, the granular tables. So we are seeing that in 24-25, private non-financial corporations investment in machinery and equipment. We are segregating, there are three components that MOSPI gives, real estate, machinery and equipment, intellectual property products, etc. There are three subdivisions of the overall investment in GFCF, capital investment. We focus only on machinery and equipment. The interesting and the encouraging news is that unincorporated enterprises have maintained a growth rate of more than 10%, of course in current price terms, on investment in machinery and equipment. So I think that is a sign of dynamism in terms of the investment in, we don't have to only look at the incorporated sector for understanding the dynamism that we see in the overall economy. And again, this number is a repetition from Dr. Garg's presentation. First three quarters, the growth rates are 8.4 and 7.8, and it doesn't take much to back out